Alright, so in this video I'm sitting down with Michael. We said we would do a separate video where I cover my setups and the things I trade, kind of going more in depth on how you can get in early first, kind of catch the big move in the market, then let the other guys who trade the trend come in later and also trade that at the same time. So kind of go in depth on that. I have two setups that I use all the time when I trade, and these are powerful setups we can use also to capture the early move and then the trend after. And we'll kind of go in depth. I'll show this to Michael. You guys will see it at the same time on the charts. And hopefully you can get some good lessons and learn a lot of stuff about how this works out. Before we jump in, if you want to see Michael's setup, we did a video about this in the past, a few days ago. Check out for me from over there in that corner. And you can check it out and see how he's trading on a more fake breakout basis. So that's a good one for sure to watch after this.
Yeah, but I'm interested now in hearing what you have to show us. Let's bring it.
So you see how on my chart I have two different things. I have a setup, which you will see on the blue triangle. We have one at the bottom, just over here. This is one of the blue triangle setups, the first one. Then you have another setup that appears in the chart here. These are custom indicators I've quoted for my style, so it helps me to kind of look at a trade in a much faster fashion. Then you have this other setup, which is this one over here. It's a green triangle. Okay, we also have the red ones, which are going to be appearing when you have these down trends, these sell trades. But for the most part, we have the green one. We have the green one here, and we have the blue one right over here on the other side. Now, this is two different setups, but they do the same kind of function. One is using the Bollinger Band to get in, which is a more like a reversal kind of trade. And the other one is using a whole moving average, which is more like a trending kind of trade. It's more for capturing the trend. So what I'm going to do is zoom in on the first setup we have over here on the chart. I took off the whole moving average. Now we only have the Bollinger Band on the charts, which is these blue lines at the top and the bottom. So what I'm looking for is I'm looking for price to break the Bollinger Band, showing us we're getting at the extreme levels of being oversold. We want to get into a buy trade at that time. And I want to see we have a nice engulfing candle, so closing beyond the high of the previous candlestick. So you can see we have a small bearish candlestick here, then a big bullish candlestick, and that's our sign to get in, because now we have a extreme point. We have buyers stepping into the market to go long, and we want to get into that kind of environment on this market. So what I do is, by the way, this has a decent win rate, but not as high as what we'll talk about next. This maybe is like a 48% win rate at a 2-to-1. So you won't get any like super many wins, but the wins you get are going to be large enough to cover for your losses.
And you know where you put your stop. I mean, the risk management is key to this.
Definitely. So entry is above the high, or stop loss is right below the low of this little candle that's a bearish candlestick. And then what we do is we target ideally I do 2-to-1. 2-to-1 is my sweet spot. I can take some profit off at 1-to-1 to just be safe, on the safer side. 1-to-1 is over here. That's triggered in the next few candlesticks, so 1, 2, 3 days later. And then our 2-to-1 is going to be, in this case, kind of close to the upper band of the Bollinger Band. So we have a nice target here. If you want, you can also keep this for like a longer period. You can keep it running, because we could form a trend. Thing is, we don't know yet if we're going to have a trend or just stay and kind of go sideways again. Actually, we're sideways before. On this pair here, Japanese yen, you have a lot of trending conditions, but for the most part, we were sideways even before that. So we don't have a lot of clue if we're going to go up or not. Now, what I do is this is our first trade. So we can capture this. We can let it run if you want to. It's kind of slowing down over here. Then it's kind of bumping up and going faster after a while. So you have a lot of chances to re-enter if you miss the first move. But that's our first initial move. So we have no trend there. We just kind of have a pullback, nice sideways market, bullish potential. Then we go up and then we have a trade going on. Then the next trade happened after that, because you can always go back in the market. And that's the beauty of this, is you can, first of all, ride the first move, which is this Bollinger Band reversal setup, is our first move in the trend. Then our second move happens when we switch to the whole moving average. So this is for sideways market only. The Bollinger Band gives you a nice reversal setup. The whole gives you the other side, which is more these trending setups. So whenever price is above the whole, we're trending, but it's like a expensive price to go in a specific pair or specific stock, right? We don't want to get in when it's above the whole and when it's green, because that's just giving you a bad price for that trade. When price goes below the whole and it's still green, that means we can have a good discount from the market. We have price that's pretty good price to go in. Like we have a nice entry level, kind of like a RSI. It's like if it's below the RSI limit, it's a good place to go in. It's a good like oversold level. The same thing happens here, but it's a bit more trend focused. Keep in mind the RSI and trend will be really bad. It's going to be always oversold, overbought in trends. This haul is more adapted to trends. So what I do is I wait for price to go below the haul and make again a nice engulfing candle like this one we have over here. We go below the hull with a very small candlestick. This is very tight, but then we go with this bullish candlestick right after. Right, so we push through with a nice momentum from the buyers here. Entries above the high, stop loss goes again below this little candlestick, this engulfing also. And then what I do is I target a 1-to-1 target, just for a quick profit, really quickly. Then my second target goes to 3-to-1, or whenever price closes back below the hull. Right, so if you have price going up and closing below the hull, then I want to get out because it's just not conducive to my trades. Now in this case, we went up. We never really closed below the hull. So we have a close above. We went up, close above, and then boom, this big candlestick here. So we are at our 3-to-1 in this market. 2.71, 2.79, so our 3 would be somewhere over here, 3-to-1, right? So that's a trade completed. So we have 2 trades already.
Scoopy.
That's pretty good. What we do then is we can get in again. If we go back below the hull, have a nice engulfing candle, we just go in again. We let price do its nice pullback. And we have another one over here, where price, again, we have a nice move below the hull, bullish engulfing candle, enter above, stop loss below. Target is 1-to-1 for the first trade. And if it turns to be red, I'll probably close the trade. I don't want to get in the market when it's red. I want to get in when it's green and below the hull. So here we turn red, then the trade will be exited somewhere around here, around this level. So we have a partial win. The other one is like a small win, but that's still good. We can still manage the trades better. We don't want to be in the market when it's just kind of not conducive for good trading. When it's turning red, it's not conducive for buy trades. We would rather get out and wait for the next entry to appear.
And what I love about this is, and again, I'm always putting my risk management hat on. You know where you're wrong. And like I said, your win rate's not going to be high because you're probably getting out, and maybe you get stopped out and valid things that continue. But that risk is relatively small. You're taking a stand. And if you're wrong at a very small price because you're getting a good, solid entry. The key to foundations of any good trade.
And this is all daily charts, so you can kind of walk away. I have to look at this all the time on a daily basis. You just take the trade and walk away, let it run, and you will let the management kind of play out and get you in and out of the trade. It's kind of simple.
Right. And when obviously you're not going to be loading the boat on every trade, like sound sizing takes place. I mean, the principles don't change just because of this type of.
Exactly. So then we move on. We continue. You see price move up. We kind of miss that move a little bit, but that's not a big deal. We can always re-enter. And we go below the hull again. Then we have this other setup right over here. Bearish candlestick, bullish engulfing candle, closing above the high of the previous one. And that's our next entry to go, our next signal to go in, right? Again, we are at 3 trades now overall. So we put in a buy order just above the high over here. Stop loss goes below the low of this engulfing here. And then we can always target our 1-to-1 for our first target, which without looking at the price in the future, it's going to be somewhere around here. That's our first target. And again, easily achievable in like a few days. Now, next target will be I do 3-to-1 as my maximum target because I found this to be the best. If you go beyond 3-to-1, it's really rare. It could happen, but I would prefer to get out at 3-to-1 than lose like a 1 hour or 2 hour on that trade. So 3-to-1 is, I have to hours more of the chart here, make it bigger. 3-to-1 is somewhere over here. Now you see price didn't really get to that point yet. We didn't get to 3-to-1 completely, but we get up on price close below the hull, which is over here. So we went above, never closed below, except here we closed below. Turns out we also go red at the same level. This gives us a pretty good 1.75 to 1, which is a good trade in that case. And then price crashed, so that's a good trade.
I'll take it.
Definitely. So we have 3, 4, 5 trades in total. Actually 4 trades in total here on this market. That's pretty good. All because we get in early. We have this nice trade where we have our first initial move, which could work, could not work out. It depends on whether we have a trend or not. We have these trend trades, 3 trend trades here in this market, and we can catch all these moves appearing. So this is really my best combo. It's good to have a place to trade the reversal first. Good to have a place to then add for trends later on. Kind of catch the longer moves that happen in the market and just ride the market. So this is a good example. If you want to see how Michael does it, we have a video for that. It's going to be linked in the corner over here. Also below in the description to see how he does it. But that's how it works out. Any question on this?
Yeah, and on a daily, I mean, if you're using a daily, you don't have to be sitting in front of a screen all day. Too. It's just quarters checking to see if it's over the hull.
10 minutes a day and then you're done for this whole setup.
Yeah, it really is. I mean, and really even on a scalper's type of time frame, you're just sort of monitoring that hull. A hull really is sort of the vehicle that's taking you to the promised land ultimately. Yeah. Love it.
It's a good way to smooth out the market, to kind of have a good idea of if we're going up, if we're at a good place in the market. Gives you a nice clue of if you should go long or short, or if you just like step aside because it's like too high or too low.
I think the hull too, I've used the hull for well over 15 years now. I like the hull because it's also very visually appealing. Sometimes I don't want to use as much brain power as I really need. I'd rather preserve because I have a lot of things going on, right? But really that whole hull kind of keeps in that green. Sometimes I just say is it basically changing color in a sense. So it keeps me in check. It also keeps me from getting, selling too early, things like that. Yeah. So it's good. So like you said, the key is you want to take your 3-to-1 or whatever, but some of these ones can really run. And if you have traders who want to trail and they want to go for it, it allows you the opportunity if that's part of your plan.
Yeah, you can catch these big trades with these 10-to-1 sometimes. Don't come often, but if you are there and you have a trailing kind of stop loss or trailing take profit, then it's definitely easier to catch those when they show up.
Great. So how can they find out more?
Yeah, so we have a lot of trainings on that. I've done a whole training on the Bonjour Band setup. If you want to go more in depth on that, it's going to be linked below. We have a free course for this. We can learn all the rules behind this Bonjour Band strategy, all how this works out. And we'll link that below. You can check it out. It's a free course, fully free. It's going to take you about maybe an hour and a half to complete, but it's definitely worth it. And hopefully you can learn that stuff and kind of apply it if you want and use the strategies for your own trading. So yeah, look forward to your help. And if you have any questions, post them below in the comment section and we'll answer your questions and give you some more feedback on your trades if you want to.